In today's video, I'm going to be discussing the money supply and how it's currently doing something it hasn't done in about 90 years, and how this is signaling a massive move in the economy and in the markets. I have all the details for you right here in the video and full explanation of what I'm talking about when I say money supply and what we need to continue watching going forward. So with that being said, let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons right down below. I really do appreciate it. Also, if you haven't done so yet, make sure to subscribe to the channel as well with the subscribe button down below. Again, thank you so much for being here. Really appreciate your support. Let's get into it and talk about it. All right, now first off, let me clarify really fast here. When I say money supply, I'm talking about a couple different categories. There's two different identifications of money supply. In fact, there's more than two, but let me break them down for you, okay? So the ones that we want to focus on here in this video are M1 and M2. Now, what does that mean, right? I know, it can be kind of confusing, but let me explain exactly what this is. So M1 is cash and cash equivalents. So like cash in your pocket, coins in circulation, money sitting in a checking account, things like this. So something that is basically cash or the equivalent of cash, something that can be accessed very, very fast and takes virtually no effort in order to get that money, okay? So something like that would be considered M1. Now, M2 is also the same thing. It's the same ones that I just mentioned there, but it also includes things like savings accounts, money market accounts, CDs, certificates of deposit, things like this that are also cash or cash equivalents, but it takes a little bit more time and a little bit more work to access them. Like, here's the thing. When it comes down to a CD, like a certificate of deposit, yeah, you can surely access that money, even though it is technically locked up for a year, 2 years, 5 years, 10 years, whatever it happens to be. You can still access that. There's a penalty to accessing it, but you can still get that money. So that's what I'm talking about. So that's what also is encompassed within M2, okay? So just take those into consideration. Now, this is actually pretty interesting because we need to continue watching the money supply. At the end of the day, what makes the world go round? Money does, okay? I know a lot of people may disagree with that and be like, oh, money isn't everything. You're right, money isn't everything, but it's practically everything, okay? Let's just be real for a second. It is massively, massively important. However, between the years of 2020 and 2021, so basically a 12-month period of time, they printed about 26% of the dollars in circulation. That's a massive, massive amount of money. They printed about $6 trillion during that 1 year period of time because the economy was closed down, a lot of things were happening, and a lot of free money was flowing out the door to literally everybody and their brother. It was nuts, all the money that was going out. I was talking about it at the time. That was a few years ago, okay? But that was 26% of the money supply that was printed during that one year period of time, okay? But right now, okay, let me tell you some other details about this. So in April of 2022, the money supply peaked at $21.722 trillion, okay? So money supply, again, taking into consideration everything I mentioned with M1 and M2, $21.722 trillion in April of 2022, okay? Now, in May of this year, 2024, the money supply actually shrunk by 3.5%, or actually it's just under 3.5%, and $759 billion is how much it shrunk, down to $20.963 trillion, okay? So it shrunk. We generally don't see the money supply shrinking. However, when it does shrink, when the money supply does go down, generally this gives us a pretty good signal into something happening majorly with the economy and something also happening with the markets as well, okay? Now, here's another thing that I want to point out really quickly. What continuously is used to, I don't know, buy everything? To buy housing, to pay for rent, to buy food, to buy clothing, to buy everything. What do we use for a medium of exchange? Obviously, we know it's money. That's not a trick question. But again, that's the point here, is that when we see money declining from the money supply, it simply means that less dollars are out there in circulation chasing the same amounts of goods and services, or even more goods and services, okay? So generally, we see an expanding money supply over long periods of time. In fact, the last nearly century, the last 9 decades, so nearly a century now, we've been seeing expanding money supply. Except now we're seeing the contracting money supply. So it means the money is being taken out of the system. Money is being taken out of supply. Is that going to make sense? Out of circulation. So what does that simply mean? It simply means we rarely ever see this. In fact, like I said, the last time that we saw something like this, the last time that we saw the money supply contract by 2% or more was way back in the 30s, okay? A long time ago, like 90 years ago or so, give or take a little bit, okay? So that's a long time ago, and now we're seeing a contraction in the money supply of about 3.5%. Actually, to be exact, it's 3.49%, but again, right there, okay? So what do we need to continue watching going forward? Well, this is going to signal something, okay? Now, here's the thing. I've been mentioning this for a very long time now. What we're dealing with right now in the economy, massive inflation, high interest rates from the Federal Reserve, the affordability of everything being like non-existent, right? Like nobody can afford anything anymore. I mean, look at the housing market, for example. Is anybody buying homes right now? The answer is pretty much not, okay? If you look at the years of, say, 2020, 2021, 2022, the market was relatively very strong when it came down to real estate. But today, is the market moving? Is it doing anything? No, the market's doing nothing because nobody can buy anything. Interest rates are so incredibly high. And it's not just that as well. Interest rates are high on everything. If you're floating balances on credit cards, if you're getting personal loans, if you're getting a new mortgage, if you're refinancing, if you're getting a line of credit, a personal loan, an auto loan, it literally doesn't matter. Interest rates are massively high right now. The affordability of life is just like not sustainable, right? It's very difficult for a lot of people. So basically what this is signaling is that, hey, we've got some major movements here in the money supply, and that we're going to see this also translated into a major shift in the economy. And also this is going to be reflected in the markets as well. Remember, a lot of times when you take nearly $1 trillion, well, at this point it's almost $800 billion, so, approaching $1 trillion rapidly, out of the money supply, some of that money is going to be removed out of the markets as well, okay? It means less buying power, less firepower to plow into the markets as well, and basically keep the economy afloat. When we have $1 trillion less in the economy, it simply means that's $1 trillion of less money that can be spent, can be circulated, can be used for goods and services, can be invested. That's not very good, right? Again, when you have more money that can be used for all those things, the use of exchange for goods and services, investment, everything like that, it helps keep the economy strong. Now, again, I want to point this out really quickly as well. When there's too much money in the economy, when there's too much money circling around as well, that can cause a lot of depletion of the value of the dollar simply because there's too much supply. When there's too much supply of something, value must go down. It's simple economics, it's simple supply and demand. When there's too much supply of anything, prices must go down. When there's too much demand of anything, prices must go up. Make sense? So anyway, that's just what I want to bring to your attention. So kind of makes sense here a little bit. I know it can be a little bit confusing, but want to bring this to your attention really quickly so you can see what's going on here. Obviously, we will continue watching all this very closely going forward, but I would not be shocked whatsoever at all now that we're here in the second half of 2024. Obviously, as I film this video right now, it's going to be weird, okay? I would not be shocked one bit to see a massive crash and burn of the economy. I would not be shocked at all to see that. I wouldn't be shocked at all to see a major crash and burn in the markets, the stock market, real estate to go down further, crypto. I mean, that's already kind of crashing right now as we speak. I wouldn't be shocked at all to see something like this happen. Considering all of the different things that we're seeing piling up right now, there's way too much evidence pointing toward a major crash and burn than there is saying, oh no, it's going to be all roses and butterflies and fields full of daisies. That's like the opposite of what we're seeing right now. So that's not me just sitting here being a pessimist. That's just being realistic and objectively looking at the data that's out there. Make sense? All right, anyway, I'm going to leave it at that. As always, please leave your comments, your questions, your feedback down below. Again, subscribe down below, like the video, share the video. Again, all buttons down below. Leave your comments, questions, feedback down below. Otherwise, check out the other videos here on the channel, the thousands in the video library, the ones I've hand-selected for you down below in the description at the top of the comment section, and right now popping up on your screen as well. You'll see some videos there. Check out one of those. Again, thank you so much for watching. Really appreciate your support. Have a nice day, and catch you again later in the next